Hello friends, today is my 16th presentation for the team of corporate finance and accounts function, and the subject is implementing corporate governance in all the functions across the organization. And overall this is my 47th presentation considering all the YouTube presentations I have made so far. What I plan to include in this presentation are establishing how to establish a corporate governance framework, identifying 4 pillars of the good corporate governance policy, implementing corporate governance framework in the finance and accounts function, implementing sound corporate governance policy in the legal and secretarial functions, implementing sound corporate governance policy in the sales and distribution function, implementing sound corporate governance policy in the purchase and materials function, implementing sound corporate governance policies in other 6 functions which I will just share, and activities that can adversely impact the business, including the unethical activities. Number 1, establishing a corporate governance framework. The most important thing is that complying with the following essential requirements to enable the establishment of such a corporate governance framework. One is complying with the requirement of the Companies Act. Now it sets out requirements for setting up the below committees in the organization along with their roles, composition and powers, like board of directors, audit committees, compensation committees, nomination committee, corporate governance committees. Then it also specifies, Companies Act also specifies requirements with respect to the financial reporting and its disclosures, shareholder rights and corporate social responsibility. These all need to be complied with. Second is complying with the SEBI Act 1922 and LODR, which is the listing obligations and disclosure requirements regulations 2015. Now this includes primarily composition of the board of directors and roles of chairman, MD, CEO and directors, setting up the board committees and composition and roles, etc., related party transaction regulations, corporate governance reports as part of the annual report, shareholders rights, protection of minority rights, setting up a code of conduct for the board members and senior management, and establishing a whistleblower mechanism. And another thing is that complying with the NSE, National Stock Exchange listing requirements, and which primarily includes a majority of the independent director must be there on the board as required by the NSE, and ditto is for the Bombay Stock Exchange, that is the majority of the independent director must be on the board. Now what are the 4 pillars of good corporate governance policy that affect all stakeholders? Now there are primarily 4 pillars are: number 1, accountability; number 2, transparency; number 3, fairness; number 4, integrity. And highlights of each of these 4 pillars are given function wise separately in the following slides. Function wise: implementing good corporate governance policies in the finance and accounts function. This starting with the accountability, then transparency, then fairness, then integrity. Accountability. Now the corporate finance team must set up clear goals and objectives for profitability, balance sheet and cash flows, etc., measure the performance indices at least quarterly, report financial results to the management and board regularly, hold F&A accountable for all their targets, approve all the major financial transactions and take responsibility for all the financial transactions, establish robust internal controls systems and implement segregation of duties concepts. Transparency. The team must maintain accurate financial records, disclose any material risks to the company's financial health, publish comprehensive financial reports that include income statement, balance sheets and cash flow statements. Fairness. In the computation and reporting of the profit and loss, balance sheet and cash flows, it must ensure that financial information is accurate and complete, avoid any manipulation of the financial data in passing of the vendors, consultant, contractors and service providers and payment releases, and in processing of the claims of the dealers and customers towards incentive schemes and expenses, etc. So these are the 4 pillars that F&A team must ensure that these are implemented. And integrity, the last one, the promoting ethical principles and performing activities consistent with these values and principles in the areas of finance and accounts, and force a zero tolerance policy for the unethical accounting practices, conduct regular audits of the financial records, and establish a whistleblower hotline to report any suspicious financial transactions. 4. Implementing good corporate governance policies in the legal and secretarial function. Now, here the accountability includes setting up targets for ensuring 100% statutory conformance and timeliness for resolving the outstanding litigations, carry out the audits and measure statutory conformance and timeliness. I mean, carrying out the statutory audits, all the legal audits. Hold legal teams accountable for facilitating and upholding the organization's legal framework. Approve all types of purchase orders, contracts, agreements, and legal perspectives. Ensure that company complies with all the applicable laws and regulations. Establish robust systems to amend statutory checklists vis-a-vis ongoing statutory changes promptly, protecting the company from any legal liability, and report statutory non-conformance to senior management and board promptly. Transparency. The legal and secretarial team must ensure that it maintains accurate records of legal information such as licenses and approvals, legal notices, fines and penalties, pending litigations, court cases, and timely appearances, statutory audits through specialists, potential legal risks to companies, and sharing the senior management board and corporate governance related conformances. Fairness. In presenting company cases before the judicial authorities and courts, in seeking statutory approvals for licensing, product quality, environmental clearances, etc. Fairness in rendering legal advices to all functions vis-a-vis the any documents or agreements with vendors and customers and or business associates to ensure statutory compliances, and ensuring that no conflict of interest in any negotiation or agreement in the clauses is there. Integrity. Enforce a zero tolerance policy for statutory non-compliances. Conduct regular legal audits of the applicable statutory acts. Protect the company from legal liability and protect the legal rights of all the employees. Implementing corporate governance policies in the sales and distribution functions, including marketing function. Accountability. Setting up sales, market share, and sales promotion targets appropriately. Monitor actual accomplishment and give regular feedback. Hold the sales team accountable for their results. Transparency. Disclosing pricing structures, terms and conditions to the customers. Providing detailed product information, including features, benefits, and limitations. Fairness. While talking about this transparency, of course, one has to ensure that confidentiality related clauses are not disclosed. Fairness. Campaigns, sales promotion activity truthfully, pricing of the products, spares, and services. Fairness in that selection of the channels, partners, dealers, etc. Fairness in selection. Design of incentive schemes for channel partners and customers. Pursue fair competition practices. Treat all types of customer fairly. No misleading statement in sales promotion materials. Integrity. Promoting ethical principles and performing activities consistent with those values and principles in the areas of sales and marketing function. Establish a clear code of ethics. Conduct regular ethical audits. Raise expenses or incentive claims that are genuine, and discharging the contractual sales obligation truthfully. Now, these are primarily the 4 pillars in the context of the sales and distribution function. Now, I take up the good corporate governance policies in the purchase and materials function. Accountability. Set clear targets for material costs, value engineering, and continuity of production by ensuring material availability. Measure material costs, inventories, and timeliness of material availability. Hold the purchase team accountable for accomplishing the targets. Approving all major purchase orders, agreements as per the approved authority norms. Establishing procurement policies that are comprehensive with respect to the vendor selection, bidding process, negotiation of pricing and terms, purchase orders and agreements, approval authority. Transparency. This includes sample approval, particularly in the context of the regular production, quantity measurements, price competition formulas, vendors' performance evaluation. And fairness in rate negotiation, rate amendments, and settling commercial terms. Vendor selection based on quality, technical competences, and ethics, and percentage buying mix allocation amongst the multiple vendors to ensure fairness. Of course, here again, just repeating that the confidential working for the pricing is not to be shared with the outside, with the vendors. Integrity. promoting ethical principles and performing activities consistent with those values and principles in the areas of purchase and material function, source supplies from ethical vendors only, choose environmentally friendly and statutory compliant vendors, and engage in competitive bidding and buying at arm's length. These are the requirement 4 pillars of corporate governance to be implemented in the purchase and materials function. Implementing corporate governance. Now there are other 6 functions which I have highlighted, like quality control and assurance, R&D, project management, service deliveries, IT system, ERP, HR and administration. Now considering the paucity of the time and the size of this, I am not incorporating in this presentation, but these are in detail available in my book, which I'll share at the end of the last slide. Then now function wise in that book, function wise accountability, transparency, fairness and integrity have been captured in detail. Now what are the activities which are unethical, which are including unethical, that can adversely impact the business while developing the corporate governance framework? Non-conformance to the statutory requirements with resultant fines and penalties, lack of accountability as performance targets like KPIs, KRS, they need to be set up for different hierarchical levels in the various functions, inaccurate measurement of performance results and inadequate monitoring of the targets, KPI, KRS, lack of transparency in business operations, unfair business policies, practices that lead to not balancing the interest of the company, business associates and customers. Senior management indulges in unethical practice and there is practically no code of conduct. Inadequate or no punitive action on employees or vendors or channel partners or business associates engaged in unethical activities. Weak internal control systems and audits, and inadequate risk assessment. Now these are the activities which the entire organization team, particularly finance and accounts, they need to be aware of. Future references. For more details, please refer to my second book titled Profitability and Ethics, Essential Ingredients for Business Success. It has been listed in the Amazon as per the links given below for India and international separately. You can also refer to several blogs on my website related to the corporate finance and accounts function under the various blogs categories, which in this case is all industries. There is another category for the real estate sector. You need finance and accounts team need to refer to the all industries category. My website address is given here, www.ethicalprocesses.com. You can also refer to some of the articles of your interest on the following the Facebook and LinkedIn. Thank you very much.